Hi everyone, let's go over my bullish and bearish low time frame, medium time frame and high time frame Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we've been looking for a three-wave structure in an ABC, which is a 3-3-5 wave move where the most common target for wave C is between the 1 and the 1.236, taken from the low to the high of A to the low of wave B. And as you can see, price is currently ranging inside this area after taking the highs over here that we identified a while ago at 28.3k for maybe a liquidity grab and then continuation to the downside. Now the likelihood that this move to the upside is part of a wave C than a wave 2 is because of the 886. So the 886 Fibonacci taken from the low to the high of A is a common target for a wave B or a wave X, but a rare target for a wave 2. So probability wise, if price is bouncing on the 886, it is more likely that the continuation to the upside is going to be a C or a wave Y, and that is important information to keep in mind, and I will share more about the differences of this potentially being a C and potentially being a wave 3 in the more bullish scenario, because here in a bullish scenario we're talking about a wave 1 followed by a wave 2, and then this is a beginning of a wave 3 to the upside, where the minimum target for a wave 3 is going to be that 1.618 at 28.9k, which is a rare target for C, actually one you don't really want to see, but it's a common target and minimum target for a wave 3 at 28.9k. So that is very, very important. And also, while price moving to the upside, you really want to see volume pick up, because this is going to be a wave 3, which is the most powerful and the longest wave usually in an impulsive structure. Now we do see volume here moving to the upside, but it also is quite known for a wave C to have a high amount of volume at the end of a wave. So preferably, if this is a wave C, this is the high over here, and you don't see this high taken at 28.5k, basically the high that C made. That is preferably preferable for the bearish scenario. If price, however, moves towards the upside and is going to reach 28.9k, the probabilities of this being a 1, 2, 3 are going up. Even though price bounced on the 886, a rare target for a wave 2 is still a target for a wave 2. Also, this wave 1 is very difficult to count in a nice 5-wave structure, like impulsive move, because inside a wave 1 you want to see a 5-wave move. You can count this in a 5-wave move to the upside, but it's not nice. It's not clean at all. So that is something to keep in mind. So we have to wait and see how price is reacting after it took that liquidity at 28.3k. And if we then move towards the medium time frame, then the bullish scenario, where this is a wave 3, basically means that this has to be wave A, this has to be wave B, and this has to be a wave C, and then a 5-wave move in this wave C hitting the most common target area for a wave C between taken from the high of A to the low of A to the high of B. As you can see, price wicked inside this area, hit the 1-to-1 very nicely indeed. However, there's a couple of reasons that it's not necessarily a preferred scenario, depending on now what price is going to do here. But this wave C didn't bounce on any strong support. We only had a bit of a support resistance flip, but that was about it. So I didn't have any like target box over here. Also, this wave C is shorter, as you can see, the 0.618 fib time taken from the beginning to the low of A to the high of B to compare the time of A with C. And usually a wave C is a bit longer than a wave A. Now that is definitely not an invalidation. It is just a little bit more rare for a wave C to be shorter than a wave A. So preferably wave C was actually a little bit longer, but this is fine. But the main reason also that this was an alternative is because of this move to the upside, which is very, very difficult to count in an impulsive structure. And then the retracement we got to the downside, reaching the 886, being a rare target for a wave 2, is not really something you want to see if you're looking for a lot more upside in a bigger wave 5. Of course, it's all probabilities, and price can already be inside now a bigger wave 3 to the upside, and sometimes price wants to be confusing, like, yeah, okay, it's not easy to count a 5-wave move over here, but there is a 5-wave move. Yes, wave 2 retraced to the 886, two things that are maybe not that likely or that probable for an impulsive structure, but that can also put people on the wrong foot for eventually continuation to the upside, right? So yeah, we know what to look for locally. If price is going to move back to the upside, take this high, move to the 1.618, the probabilities of this being a wave 3 and therefore continuation to the upside, where at least then the targets might be taken over here at 30k and potentially that target then at 31k, because then we're thinking about a 1, 2, 3, 4, 5, right? Higher prices might be interesting. The bearish scenario on the medium time frame is that this high over here, as mentioned, is going to be the high of that wave C, and then over here we have a 3-wave W in an ABC 3-wave structure, followed then by another 3-wave structure in this wave X, which then preferably is going to be finishing the high over here, the high that we just made. For now, a move to the downside where we have the most common target for wave Y between the 1 and the 1.236, which is between 23.9k and 23k, taken from the beginning to the low of W to the high of X. One thing I don't necessarily really like is that this target area of wave Y is in between the yellow and my blue target box, so it doesn't really have confluence with any of my target boxes. The yellow target box is between 24.3k and 24.8k, and then the blue target box is between 22.6k and 21.8k, and you can see the target area for Y at the moment is in between these areas. However, a wave Y also has the 0.618 as a common target, and the 0.618, even though it is above the yellow target area, it is just below these lows. And that is interesting because price could then move to the downside, take the liquidity below these lows, swing failure pattern, move towards the upside. And that could be a potential trading setup as well, where if you have these lows, then price moves below the lows, takes the liquidity, closes above, then moves to the upside, and the close above is then a potential entry, stop loss below the low, and then we'd be looking for a move to the upside. No financial advice, but that is how a swing failure pattern is traded. So yeah, that is actually quite interesting and something to look out for. But then again, preferably wave X is not going to go a lot higher, mainly because of the low time frame count that I showed you, where this is then an ABC, which is a regular flat, by the way. A regular flat is definitely more rare than an expanding flat, because a regular flat is then a 3. Let's actually quickly explain this. So a regular flat is a 335 when the 0.9 is hit. So actually the 886 is not really that, like, should be a 0.9 over here. So 0.9, which has been hit. And the 0.9 is a minimum target for a regular flat, which is then a 335 wave move, where the common target for that regular flat has been explained. And a regular flat is a bit more rare, so also something to keep in mind. And then if we go to the high time frame, because I do shortly want to go over the high time frame, I basically had almost like two preferred scenarios, right? Because in the high time frame video, I explained that this scenario was my preferred scenario, but because of the price action locally over here with the 886 retracement, the move up not really being a nice 5-wave structure, the other scenario that I'll show in a second started to slowly take over, so in this scenario, wave 1, 2, 3, 4, looking for a 5 to the upside, you want to see an impulse, right? You want to see price continuing to the upside with increasing volume and at least taking that 1.618 in the bullish scenario, right? You're looking for upside where the maximum target, absolute maximum, is 38k. If price is reaching this, it's invalidated. So for this wave 5, that is. So for this wave 5, don't want to see price moving all the way up there. And these highs at 32.4k are very interesting for a liquidity grab before then a move to the downside. And the invalidation for this scenario is taking over here the lows, or actually, well, entering the price action of wave 1. It's not really taking the lows over here per se at 25.3k, because you don't want to see overlap between wave 1 and wave 4. And then in the scenario that started to grow on me because of the price action that we had locally, this is still something to keep in mind, where this is a wave 1 finish. This is the first structure, and then a W as mentioned on the medium time frame, an X, and then we'd be looking for a move to the downside in a wave Y. But as I've also shown you right now, in the bearish scenario, the target area for this wave Y is a bit higher than the blue target box. And that is important in this scenario, because if this is going to be a wave 2 and then a 3-wave structure, where this is a wave 1 and then a 2 and a 3, the most common target for wave 2 is between the 0.5 and the 0.786. And you can see that the 0.5 is inside this target box, sitting at 21.9k. So preferably, if this is going to be a 3-wave structure, you want to see the target area for wave Y being around the 0.5. But at the same time, you now know that the target area for Y is actually above the 0.5. And the 382 is a rare target for a wave 2. But a common target for a wave B in the potential A, B, C, which then connects this structure to the macro bearish scenario, which you will see in my macro video. So yeah, there's a lot going on these time frames, and it all depends. It's so interesting to see the lower time frames make up the higher time frames, right? What we see on the lower time frames is going to decide what our preferences are on the higher time frames. And I explained exactly what I am looking for right now with the high that price has made and the levels to look for the probabilities for different scenarios, the 1.618 over here or a move to the downside. We wait and see because no one knows what price is going to do. We can only play the probabilities. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.